Okay guys, welcome back to another collaborative video. We do these fortnightly. If you're not aware of that, stay tuned for them. We've got a bit to talk about here today, and I think Whale will take the lead with the short term, so I'll let you get straight into it.
Yeah, hope everyone's having a great day. We're going to talk about the short term to start off with and then dive right into the macro. There's a fair bit of stuff going on short term because we've had quite a volatile last few days. Everyone keeping up to date with the market, everyone watching the recent moves. We'll notice we've had this pretty intense sideways chop zone. And I would say, Wolf, I would say probably this is one of the most intense sideways chops I've seen for quite some time. I don't know if you'd probably say the same thing. It's been pretty intense. We've had these massive wicks, a lot of fake outs, a lot of fake breakdowns, but we have developed quite a clean pattern after all, which has been this descending channel. And this is our short-term channel over here, only lasting about 2.5 days. So not a very large structure over here, but in essence, this is a bullish reversal structure. Will it lead to a reversal? That's something we'll talk about in a little bit longer. But as you can see, we are currently retesting the upper resistance range of this channel. So we have our upper resistance and our lower resistance. Obviously, a descending channel is a bullish pattern. We will expect a breakout to the top side if we can close a daily candle above this level. With confirmation over 42,000 would most likely lead to the top side. Wolf, do you have anything to talk about on the short term? I really don't think there's much to talk about today because we really haven't moved
the short term's a little bit too choppy for my liking.
Yeah, it is quite choppy, and I've been kind of saying, you know, now's not really the best time to be taking any swing trades. Scalp trading, sure, scalp trade. Swing trade is not really the best time, but I'm going to quickly go ahead and zoom out and talk about what I see, and then Wolf, I'll get you to jump in and kind of talk about what you see. But this is in essence what I'm seeing. I'm seeing two patterns. I see a macro ascending channel, which is this upper line here and this lower line here. And I see a ascending rising wedge or rising wedge, which a lot of people are obviously talking about now, which is a pretty obvious pattern on the chart, knowing this is a bearish pattern. And I've talked a lot about this already, but what I would expect to see personally, if we do break down from this level, it would be a confirmation below 23,500. That would trigger a breakdown to about $22,000 initially. And the reason I say $22,000 is because this is a pretty major flipping zone over here. If we lose that level, we can expect the price to drop back down to the upper, should I say, rising support of this ascending channel, which will meet around 20,000, potentially even lower. Now, obviously, we are on a rising wedge formation. Now, rising wedges out of most bearish structures have the highest break upward rate, meaning there's about a 30% chance rising wedges actually invalidate and the price continues upwards instead of breaking down as what you would expect from the market structure. So that is always a possibility, but we'll talk a little bit more about that later. Of course, we have the FOMOC minute meetings coming out tomorrow, I think, and that could definitely stir some volatility and move the direction in either way. But to keep it nice and short and sharp, to summarize what I've been saying, now is definitely not the time to be making any rational decisions. Now's not the time to be accumulating. Now's not time to be buying long-term positions. All that should have been already done. Now is the time to purely sit there, wait, and react to what happens. Wolf, I'll let you take it away.
Sure, I'll share my screen here. So yeah, I'd agree with a lot of what you said. Now my wedge is drawn differently to yours, but ultimately we've got the same structures. I've got the ascending wedge, I've got the channel. The bottom line is dashed because it's speculative in my opinion. We've only had 2 retests, but it is there nevertheless. And so yeah, I'd say market pattern wise, this is bearish. And so, you know, with that said, doesn't mean we have to break bearish. Obviously, one of the main reasons we did actually pump in the first place here, we had the macro retest of that yellow line. That was bullish. But another supporting reason, and a very major reason, is the fact that inflation topped out, at least for the short term. And so that directly led to extremely bullish price action. And we saw that materialize in the S&P 500. I mean, after CPI came out, you know, we had this massive green candle and we'll come right up here towards resistance. I'll talk about that in a second. But yeah, ultimately what I've been saying to my subscribers is that, yeah, I agree. Yeah, you know, like 23.8K was a big zone, right? We broke that to the upside, closed the daily candle above it. In my opinion, that was a pretty good buying opportunity. But as we've come up to this resistance, it's kind of faded away a lot. And I will maintain that if you hold Bitcoin positions right now, you shouldn't sell just yet, right? I wouldn't be selling Bitcoin. Like, obviously, if you hold long-term positions, you wouldn't be selling at all. But, you know, shorter-term, medium-term positions, you shouldn't actually sell just yet. You will sell when we actually break down from this wedge. And so if you did buy Bitcoin in the break of 23.8K, realistically, if we break down from that wedge, we're going to be breaking down probably 23.5K. You're losing like 2%. And so I think it's a relatively interesting position we're in right now. And I think that we will, obviously this wedge can only last so long. The way I've drawn the wedge, it most likely will be breaking within the next week or two. And then on top of that, we're kind of charging straight towards a major downtrending resistance line on Bitcoin as well, stemming from November and then retested here on April. And I think that currently is sitting at about 26, 25K. So yeah, lots of resistance. I wouldn't be going deep into buys charging against resistance. You want to be waiting for the breakdown, the break up, and I wouldn't be selling yet. You want to be waiting for the breakdown before you sell as well. Now, as for the TA itself, like I had this little RSI triangle here with broke back to the downside, stochastic RSI. It's been, stochastic RSI notoriously is very unreliable in my opinion, but realistically, it has worked quite a bit. I mean, you can see I can circle all these tops here, and you can see the price action. Generally speaking, when we top out the stochastic on the daily, we lead to about a 10% correction. We've recently topped out. We've seen some of that start to materialize so far. So it's definitely an interesting time on the daily. But I suppose the main thing I wanted to talk about is actually the fact that all of these resistance zones are lining up quite well, right? So we've got that major downtrending line on Bitcoin, major downtrending from November. We've also got the major downtrending line on the S&P, which is being tested right now. And then on top of that, we've also got a major downtrending line on Ethereum, which is coming up to being tested as well. And I suppose it's very interesting that all of these things seem to line up. And so when you think that these, and this is just a reminder, when you think that these assets act individually, they act very much more in tune than you might think. And so right now, the whole market, not just cryptocurrency, but also stocks, is collectively charging into a major resistance zone, and it's definitely not the time to be short-term bullish, in my opinion. Would you agree with that?
I agree and I disagree. I think the reason I disagree would be primarily due to context, not the what word would I use? Not the idea that you're pushing. The fact that you're saying, don't be overly bullish when you're pushing into resistance is completely true. The reason why I am in a little bit of a different situation and my followers per se is just because we accumulated a little bit lower. We got around $18,000. We've got a little bit more of a, I would say, safety net if Bitcoin does drop down. For example, I'm not looking to sell, and we're not looking to advise our followers to sell if we lose 23.8K, just because we do have that safety net. We can go all the way back down to $18,000 before we break even, and I don't think we're going to see that occur. So, in essence, we are coming up on major resistance, and I think the FOMOC minute meeting tomorrow is going to be really telling for the market, because if they come out and they say, look, we've still got every intention to ramp up interest rates, we could see this resistance act as a resistance and actually get rejected, and then pull back down to $20,000. I'm going to go ahead and screen share real quickly, Wolf, just to show you a chart that I want to go ahead and bring up, and I think it is on. Let me just quickly try remember which chart. Oh, it was actually the Brave New Coin Liquid Index, and this is kind of something I was talking about a few videos ago with on my channel. Sorry for all the annotations over here. I was doing a different video. But what I was actually expecting, and I hate fractals, and I've been saying this for a long time, I really despise fractals, but I'm going to go ahead and use a fractal anyway. And the fractal that I've seen over here is not really a perfect fractal, but something that we can kind of expect to see with the price action, or a possible scenario at least. And this fractal would be this fractal over here. We can see that we come down over here, push upwards into this resistance zone, and come back and retest this 9-year trend line before finally pushing up later in the year. I think this would be a perfect scenario coming up on resistance now, obviously at a broad market. I think we could definitely see a push downwards, retesting that $20,000 zone, which actually lines up with that $20,000 upward trending support line from that macro ascending wedge that we showed you, or should I say ascending channel, which we showed you before, which is this line over here, $20,000, bouncing from here, then to retest and continue upwards later in the year. That's what I would expect to happen. I'd say it's more likely we see that than we do just push straight upwards from here personally. But moving back onto this descending channel, and you've got that descending trend line, just to show everyone, it is actually a descending channel. We do have our midline over here. You can see generally when we break through this midline, we kind of push upwards to the upper side of the channel, and break down the midline, we push to the lower side of the channel. And of course, we push through the midline, we're pushing through a major horizontal support zone. It is quite likely that at some point, maybe not right now, but at some point, we do come and retest this downward trending resistance. So I think right now, guys, again, best thing to do is to be cautious, be aware of all scenarios, have your invalidations, have your validations, have a plan for both downward and upward price movement, and just be patient.
Yeah, that's what it's all about. I think having a plan, like, and this is what I posted on Twitter before. I actually did a very interesting, well, it's not interesting, but it's true Twitter post. I said that predicting the future is much less important than knowing how to react to the future. Because at the end of the day, it's reactions that make you money. You can be a great analyst and you can predict exactly what's going to happen, but if you don't act, you're not going to make any money. And so I think that a lot of people in the market get the wrong perception of TA. Yes, TA is about predicting the future, but generally speaking, it doesn't really matter what happens in the future. If you know there's a profitable scenario for each way it goes, up or down, who cares, right? And I think a lot of analysts, a lot of traders would agree with that premise. Now, I would say one thing. I think that, and this is just clarifying, I suppose we can both just run down our views broadly. I think I already know what your views are. This is what I would say about Bitcoin right now and cryptocurrency in general. I think that right now it's more likely than not the bottom is in. But I think, I'll say it's more likely than not that the bottom is in at 17K. But I do think it is very likely that we do swoop back down to the 19, 20K level and retest that macro line, simply because of the fact that, as I said, we are charging into resistance. Short term, in my opinion, doesn't look particularly bullish, and simply because of the fact that, generally speaking, when we top out and when we bottom out, and this isn't just bottoming out, this is topping out as well, we do see retests. We don't just do it, we don't just wick once and then come back up. That's not necessarily how it really goes. So it would be a normal market structure. Like if you're looking at what you've got on the screen right now, for example, 2015, we had a little bounce off of the first touch of the bottom. We come back down, we round out. Same thing in 2018. The only real exception of all that was 2020. And that was the COVID drop, a black swan event, which in my opinion doesn't really prove a valid point. It's just an exception. So yeah, I think we do swoop back down here. I think that's what would happen in my opinion.
Yeah, well, that's kind of exactly what I was saying before. I've been, public saying that, I've taken a bit of a risk, but I've been saying, the bottom's in. I've been saying the bottom will be in. The bottom's in at this 9-year trend line. I've been saying it even before we touched it. But luckily we got in at the market there. We took that risk, and we're up at like 40% now, which is really, really good. But at the end of the day, you've got to play it level by level. And I've really moved away. We talked about this in our last collab video. Really moving away from talking about the macro too much, because I guess spending too much time focusing on what's going to happen in a week or 2 months really takes energy and time away from focusing on what's going to happen now. And your actions and decisions on what is happening now is what's going to make you money, not what you can do in a month away or where the price is going to be in 5 weeks time. Your decisions are what you do right now in the market. That's where you make your money. So we've been focusing a little bit more on the short term and really just kind of, taking everything else with a grain of salt. Right now we are in this situation. Right now we have 2 bearish structures forming. Right now we have FOMO minute meeting coming up. We're at some major resistance. It would be more logical to assume that, we can potentially come back down, and we do have our validations. Obviously crossing below 23,500 would trigger that collapse to 22K. Obviously lose 22K. We're going back down to this 9-year trend line. And obviously if we do head upwards, break out of this short-term descending channel that we've formed, which I showed you before, and push past, 24.8K, we're most likely to continue upwards to about 26.6. And I think playing it level by level right now is the smartest thing to do, rather than saying, okay, we're down over here now, this is where we are, I think we're going to go up over here, and therefore I'm just going to take longs. Doing that is just retarded. You honestly, you're and we're talking about this before. We share very similar, if not identical, views on market psychology. We're both very, I would say conservative with trading. I take a little bit more risk, but I would say we're both quite conservative with our mindset. We're both very objective, and we don't allow emotions to impact, definitely not impact whether or not we're bullish or bearish. So just looking at for what it is, identifying the resistances and reacting is always the best way to trade, I think.
Yeah, I agree. Yeah, and as you said before, as you say in the past, short term translates into long term as well. So if you play the short term levels, realistically, it's going to translate into the long term. But I will just say that, I said before, I think it's most likely the bottom is in, and I think you agree with this. Hence, you have the line on the chart for a reason. I think that 28.6K, 28.8K, whatever it is needed for that 100% confirmation. So, just keep that in mind. If you are I know I've got a lot of long-term investors, even though, you said, and I say as well, I prioritize short-term and medium-term, for the long-term investors. If you really are super conservative, you don't want to play around and waste your time, you don't have time to stare at the charts, I would recommend just waiting until 28.6K. Obviously, you're missing out on a lot of profits in between. But that's if that's the position you're taking in the market, that's what I would do, right? If I don't have time to look at the chart every day. But yeah, I think, I've talked about what I want to talk about. Have you got anything else to add or no?
Yeah, well, I think just piggybacking off that, like if you're a long-term investor, right, and you have a good enough time horizon, so a big enough time horizon, it doesn't really matter if you're buying right now, if you're buying 18K or 28K. Like
That's also
if you're looking at, you know, like holding Bitcoin for like 4 years, there's a very high chance we're going to be over $23,000 in 4 years' time. So, and you know, I'm not here trying to, you know, use a crystal ball to predict 4 years' time. I think it's stupid, but you know, if we're going off previous cycles and we're taking a look at how the price action moves, you know, it is higher degree that we're going to be over where we are now in 4 years. So it all comes down to your time horizon. I think time horizon, risk tolerance, and capital is, you know, 3 things that you need to, you know, use to identify where and how much you should be buying at each level. Now, I do want to talk about one thing actually about the 18K bottom or whatever. Now, a lot of people were obviously really against my prediction, really against this, you know, this 9-year trend line on Twitter. I had a lot of people rage message me on Twitter about it. But I think I want to talk about this because this is going to be relevant for whenever the next cycle is. I know a lot of you guys who are watching this video, you've stuck through most of the bear market. We're still definitely in a bear market because we haven't broken out of this, you know, macro descending trend line. But you're probably going to be here until next cycle top, right? Most people here probably aren't going to be leaving until next cycle top. And I just want to remind everyone that if you're using technical analysis, so indicators, all right, to predict tops and bottoms, you are always 100% of the time, you're going to be late. You're going to miss the top or bottom because technical indicators are phenomenal at predicting trend strength, but they're terrible at predicting reversal points on the macro scale because they are completely and utterly useless because they're lagging so much, right? So you look at the reason why people have these phenomenally ridiculous predictions. You know, we're at the top over here, they're saying, oh, we're going to $300,000 Bitcoin. And, you know, we're down over here, they're saying, oh, we're going to 10,000 or we're going to 4,000 Bitcoin. The reason people have these predictions is because they're looking at technical indicators. And because technical indicators are lagging, and because we see a lot of volatility nearing the tops and bottom, we see these scenarios where the technical indicators are actually looking massively bullish at the top and massively bearish at the bottom. And then people expect that to continue and translate into price action, and therefore the price will drop down. But in reality, guys, if you want to predict tops and bottoms, you have to use horizontals and diagonal macro structures over very large periods of times to identify periods and points of confluence on the chart. Using technical indicators will either make you late or completely wrong. Okay, technical indicators have their purpose, but predicting macro reversal points, that is not their purpose. Okay, so a lot of people are screaming, oh, TA doesn't work, TA doesn't work. No, TA completely works. You just need to use the right tool for the right job. And if you're using the wrong tool, you can't expect the right results. Okay, little something to keep in mind, guys. So if you're trying to predict reversal points, always use diagonals, horizontals, use resistance levels. If you're trying to predict trend strength, use your technical indicators. That's about all I want to talk about, Wolf. Anything else you want to say?
Yeah, well, I mean, just finishing it off, I think you were talking about TA, and of course, you know, I have to plug this in here. If you want to learn TA, and I highly recommend people do, because if you don't learn TA, you're basically just gambling, in my opinion, unless you're a very, very, very long-term investor, in which case you're probably not gambling. But, you know, I think you should be able to read a chart regardless. If you want to learn how to read a chart, you can do it through many, many ways. One of the ways is through Crypto Academy. This is a company myself and you, MegaWhale, have created. Become a Trader 10-unit course. Developed it this year. You can go to the website, read the bio here. We've got a brief little blurb of what it is. Basically about 850 slides, about 86 videos, about 8 worksheets, and a trading diary in the course, all spread out through 10 units, teaching you everything you need to know, or at least 95% of the things you need to know about cryptocurrency. The absolute fundamentals, going into the more advanced stuff. Basically every single thing that I use personally, again, about 95% of the things I use personally is in this course. So if you want to learn TA, obviously it's going to take some time. You're going to have to put in the commitment, but if you're willing to do the hours, you're willing to do the work, and you're willing to make some money, this is how you do it. Go ahead and chuck us an email here at cryptoacademycourses@gmail.com, and you can become the 60th student in this course. I'll also go ahead and bring up, let me just, 1 second, BitGet Exchange. Now, if you're viewing from MegaWhale's channel, go ahead to his pinned comment, click on his referral link, sign up to BitGet. If you're viewing from my channel, do the same thing using my referral link in my pinned comment. This is an exchange that both of us use primarily. Well, I use it primarily. I think maybe you do as well.
Yeah, main exchange.
My secondary main exchange. This is my primary exchange. Why do I use it? Well, it's non-KYC on an individual level, so it matches the intention of cryptocurrency in general. I think if you're using an overly centralized exchange and you're actually KYCing, in a way, you're actually going against what cryptocurrency is meant for. So I recommend using BitGet. It's got about, I think, almost half the fees of Binance as well. And it's got trading pairs, about 70 to 80 trading pairs on futures. I can bring that up for you right now. A nice clean interface to be using there. It's also got systems in place that kind of avoid those exchange-driven scam wicks. Like on Binance, we had I think it was about 2 months ago, we had a scam wick down to like 4K or something stupid for like 2 seconds, which liquidated a bunch of people and obviously basically rugged them out of their money. You don't get that kind of thing on BitGet, or at least we have not seen it yet. And they promise systems in place that prevent that kind of thing. So yeah, sign up using our referral links there. Sign up to the Crypto Academy courses as well. And I think we'll end it there. So thanks for watching. I hope you enjoyed, and I'll catch you in the next one, guys. Cheers.